I use this little electronic pen that I write on because I'm dyslexic, and it helps me communicate better. So before we get started, I'm going to read a warning off to you. But before I do that, can you answer this question to make sure that my little righty gadget is working? This plus this equals what? And then if I get a right answer, I know that the pen is working correctly. All right, cool. It looks like it's working. All right, so first and foremost, I'm registered. I'm a Series 3 and a Series 30. The reason I am that is because I don't like paying retail commissions, and it keeps my commissions lower because I own a futures brokerage. Also have seats or leases on the exchanges that I usually trade on. Not all of them, but some of them. Now, it is very important that you read this disclaimer in full, especially CFTC Rule 4.41. I'm going to be showing you some hypothetical stuff. I'm also going to be showing you some real stuff. It's going to be a mix of the two. If you get confused, just ask. I'll tell you which the two are. You should never trade more money than you can afford to lose, because the odds are you're going to lose it all. Okay, most traders go through 2 or 3 accounts before they figure out how to do this stuff. It's just the reality of the beast. I have seen different numbers all over the place, how many of us are profitable, how many of us are not profitable. But the main thing is, if you have some discretionary income and if you need it to live on, if you got a wife and some kids and a mother-in-law and you need to feed them, keep that money, don't trade it, because what you're about to embark on is very risky in nature. All right. Now, I like to make sure that the disclaimer is even more worse than that, and tell you that your trading career is probably going to end up like a bad country song in reverse. Your wife's probably going to leave you for probably your best friend. Your kids are going to grow up hating you. Your dog is going to die because there are no cats in country songs. They're going to repossess either your Ford or Chevy pickup, and then they're also going to foreclose on your single wide or double wide trailer. If you understand the disclaimer that I have now made you aware of, that you're going to lose all your money, most of it, or if not all of it, give me a yes in the chat box. That way, if the CFTC or the NFA, they audit this, they'll be like, well, hey, he didn't blow smoke up their rear end. He told them how the real deal was. They're probably going to lose all their money. All right, cool. So let's get started here. We've got about 45 minutes. I'm going to do my best to get through the entire presentation. And what I want to do is I want to teach you a thing or two, share with you a thing or two, and then I also want to scan the market so that we can have some trades going into next week, okay? Because it's the weekend and we got next week to trade, so I might as well show you exactly what trades I'm thinking about taking myself, all right? So my name is Hubert Centers. I'm known in the trading and investing niche as the guy with the no BS approach to trading and investing. Sometimes that's a good thing, sometimes that's a bad thing. Now, when I was growing up, I grew up in the hills of eastern Kentucky in the coal mines. There were, a few things that I could have done when I was a kid growing up. I could have been a coal miner, okay, or a factory worker, which was what my mother and father were. They were factory workers in a company called American Standard. You've probably seen the faucets and the commodes and the plumbing fixtures and stuff that they do. And I was like, man, I worked there one summer during college, and I hated it. I was like, I can't do this stuff. Could have also been a coal miner, but I was like, I don't really like confined spaces when it's dark, cold, and wet. I can handle them, just not all together. So I didn't like the prospect of getting either electrocuted, drowned, or a collapse. So I was like, I don't think I want to do that. Now, there are 3 other industries that are very popular in eastern Kentucky. One of them would be the marijuana or the weed business. And I don't mean the medical type, I mean the illegal type. So could have done that. Could have been a meth cook or a dealer, or could have went into the moonshine business. All 3 of these have inherent risks that will probably end you up in a federal penitentiary with an orange jumpsuit on and arguing with Bubba who gets the top bunk. So I decided I didn't want to do any of those. So I'm just like you. I left early, and I went on this journey from start to finish, and my goal was, when I was younger, I just wanted to learn how to make a pile of cash. All right. Now, heads up, when you make a pile of cash, remember to pay taxes on it. If you don't, Uncle Sam come get you. And then the second thing is, nobody goes from the start to the finish in less than, I would say, 3 to 8 years. So you're going to have to put in blood, sweat, and tears, and you're just going to have to work your ass off, all right? It's not going to fall from the sky, unfortunately. I wish it did, but it doesn't work that way. Also, I've never seen anybody that goes in a stair-step fashion that just consistently gets better. You are going to have some bumps in the road. You are going to take some licks. Sometimes you are going to get smoked. The market is going to kick your ass sometimes, so you might as well be ready for that. It's going to happen. It's not going to be all sunshine and roses, all right? Now, I'm lucky enough and been in the right place at the right time enough to where now I'm in a couple of different masterminds, and some of these people are either members of the mastermind or speak at our masterminds, and I'm always asking them questions because I'm a relatively curious guy. Like, hey, how did you make your money? How did you do it? How did you lose your money? What would you do if you lost it all and wanted to make it all back? So there are three major ways. Well, there's three major ways. One, two, three. There was trading and investing. There were businesses, and then there was real estate. I do all three, okay? Sometimes when the market's kicking me in the teeth and it's getting me instead of me getting it, then I have to focus on the business and the real estate side. Sometimes when the trading and investing side is doing well, I'll take money from those markets and put them in the business and the real estate model. So it's really, really important for you to diversify. So if one of them is smoking you, you're okay on the other one or two, all right? Now, when I was a kid growing up, I watched a lot of Ghost of Mr. Chicken, Scooby-Doo, and Batman. And I was like, man, if I ever quote unquote make it, I'm going to have the big house on the hill, and I'm going to have them little secret bookcase doors that lead to those little secret layers, you know. So that's actually how I have my house set up now, where I walk downstairs, about 15-second commute, go downstairs, and there's this bookcase door. You pull this book, you hit this button, and it opens up into an office where me and my team work every day. And it's a small office. It's only about 1,500 square feet, and then we have other little hidden bookcase doors throughout the house. And I know it's childish and immature and stuff, but I don't really care. I kind of like it, and it's kind of fun. Now, these are just some photos of people that are in our mastermind. This is Paula Abdul. She's about 6 inches shorter than that. This is the reason I know that because she was wearing 6-inch heels that day when I took a photo with her. This is Sir Richard Branson. He has more hair than I do, but I've got more chins than he does in this photo, which means I'll probably die of a heart attack, and he'll probably live to be 120. This is Mr. Wonderful on the hit show Shark Tank, and then this is Dave Ramsey. Dave and our companies have done business in the past, and you either love or hate Dave. This is me. I'm the guy with the biggest square head here. These are the monitors that I'm in front of you right now. They're about 6 24-inch LCDs, and then I'm on this broadcast quality microphone. I'm not wearing that suit right now, all right? I've got a pair of tennis shoes on, a pair of jeans, a T-shirt, and a hat. It's Saturday, so I'm chilling out, and I don't wear that garbage on a day-to-day basis anyway. I'm usually comfortable because I'm usually trading. I've got a couple of these cool desks where you hit buttons and they raise and lower hydraulically and stuff like that. So we're always really comfortable here in what we affectionately call the back cave. So that's where I'm coming from. I just want to give you a little bit of background. Now let's dig into the information. So congratulations, you're in the right place at the right time, and here's why. I'm going to give you an opportunity at the end of this webinar to invest more in your trading education. I am not here to sell you an indicator. I'm here to show you how to properly use it. So let's talk about what it works on. So this strategy or tactic will work on stocks, options, futures, forex, bonds, gold, and commodities. So it works on a lot of different stuff. It will work on some things better than others, okay? Nothing works 100% of the time, and I cannot guarantee you anything at all in the trading markets. Number one, I'm registered, and number two, I got to be able to sleep at night. I'm not going to guarantee you a return. I'm not going to guarantee you that you will make money in trading. I can't guarantee you when you go to sleep tonight that you will wake up alive, all right? So let's talk through a little bit of this strategy. All right, now what we're going to talk about is what time frame we're going to look at, and this is really important. This will work on, does sound dangerous, doesn't it, Eric? It will work on day trading, it'll work on swing trading, and it'll work on investing. Real quick, just give me we'll do a quick informal survey. What do you trade the most of? Do you trade more stocks, options, futures, or forex? Those are the four majors. Do you trade more stocks, options, forex, or futures? All right, so stocks, futures, options, day trade, stocks, options. Okay, all right. Now while you're doing that, also give me your time frame if you don't mind. Which time frame do you trade the most? Are you more of an investor? Are you a swing trader? Are you a day trader? Okay, all right, so we got a little bit of a mix in here. That's good. Now for me, I will trade anything and everything. If I thought I could make money in toothpicks and Tic Tacs and there was an exchange for it and I thought I could pull it off, I would do it. So I'm going to focus on stocks and options. There's not as many. There's quite a few. That's actually interesting. This webinar has actually got a mix of everybody. So cool. All right. So let's dig in. This webinar will be different, this presentation. You can probably tell that I'm not your normal presentation giver. I do like to have fun and cut up. I've never met anybody that gets out alive this thing called Earth. So we're here for a very short time, so you might as well have fun. I do take what I do for a living very, very serious. I just don't take myself very serious. So let's dig in. The following is back-tested results. So what I do is I usually pay programmers. If I come up with an ideal, I then pay them to do a back test and tell me, yeah, it's a good ideal, it's got a positive expectation, or man, you're nowhere near close, it sucks. You might want to go with a different theory. So these are back-tested results when I had it paid for the back-testing model. On the S&P 500 over the last 5 years, in the stocks in the index, it worked on 430 out of 500. Now, that's not its hit rate, all right? That's not its success rate. It was just saying out of 500 stocks, it was working on 430 stocks. So that's not too bad as far as the stock market goes. Now, if you would have taken every single signal, it would have given you a 33% return. That just means if you would have taken the long, the short, the long, and then the short, and then the long, you would have been given or earned a 33% return. Now, you can increase that if you just use a little common sense and remove the counter trend signals and use either a 3-day confirmation or a 3-bar confirmation. And here's all I mean by that. If we've got this massive uptrend that we're in, for the love of God, don't short it here and cover it here. Don't short it here and cover it here. Go long here and go long here, and you're going to stay in it until that uptrend is violated, okay? All right, works on most stocks across the S&P 500. It's been profitable on 29 currencies over the last 10 years, but you do need to use the filter of a daily, an hourly, and a 10-minute time frame in order to pull that 10-year track record off on 29 different currency futures and or Forex markets. So time frame selection. This is the most important slide in my presentation. If I lose you here, I'm probably going to lose you for the rest of the day. Do you have a screen on your thing that says time frame selection right now? Give me a yes once you see that real quick. All right. Now, we got a good mix here in this webinar, and a lot of us trade different time frames. So here's what we're going to look at. These are my favorite, and this is how I look at it. And you can either go lower or higher. It's up to you, okay? So when I'm looking at my time frame selection, if I'm looking at a daily chart, I know that my time horizon for that trade is going to be weeks of time. So in other words, if I'm looking at a daily chart, I would do monthly options, okay? If I'm looking at an hourly chart, I'm going to be in this days of time, then I would do weekly options. Now, I trade a lot of futures. I trade mainly stocks and futures. I don't trade a lot of options. If you need that type of stuff, use Price. He's really good at that stuff, and he's actually in the local area here. I live in a small community called, well, the rednecks around here pronounce it Versailles. The proper pronunciation is Versailles, and then Price lives about 20 minutes to the east in Lexington, Kentucky. But if we're looking at an hourly, we know that our time frame is going to be daily as far as the hold period. And then if I'm looking at a 10-minute, I know I'm going to be in that trade for hours. And here's exactly how long I'm going to trade that. If I'm looking at a daily chart, I know the chart is going to extend 20 to 30 bars to the right. If I'm looking at an hourly chart, I know that trade's probably good for 3 days hold minimum. If I'm looking at a 10-minute chart, I know I'm good to hold that sucker for 4 hours minimum. That means I'm going to hold it for a minimum of 4 hours, or what else could happen? I could get stopped out and I could lose money, or I'll hold it for a profit for at least 4 hours, and I can always hold it longer. Does that make sense? Now, if you want to go smaller time frame, like 5-minute, you'd hold it for 2 hours. If you're looking for ticks or 1 minute, you're going to hold it for about 30 minutes. If you're more of an investor and you're going to swing longer term stuff, if you're looking at a weekly chart, you're going to hold that for months of time, like 6 months. So when I'm looking at it, I used a multi-time frame analysis, and I drill down daily, hourly, 10-minute, daily, hourly, 10-minute, or I'll go daily and 10-minute. Does everybody understand? Because I'm going to move on to the next slide. If I lose you here, I will lose you for the rest of it because you'll just be confused. Okay, cool. All right. So this is what you want. This is the #1 technique used in Japan. There's a #1 best-selling book, and 7 years in a row, this has been the #1 technical analysis tool and tactic that they use. Now, you're going to know exactly what's happening in seconds. It's very good at producing very clear signals, all right? And then what we're going to do is we're going to add a filter to it. We're either going to do hell yes or it's going to be no. Our trades are going to look perfect to the eye. We're going to look for really good trade setups. We're not going to trade the trash. And what you have to answer is it's either a hell yes long or a hell yes short. If it's a maybe, it's a no. And if it's a no, it's a no. So that's how you're going to filter out through this stuff. All right, the edge for you now. The cool thing about this indicator, and it's on almost every single chart out there, is it will give you the past, the present, and the futures. A lot of indicators will tell you what happened in the past. Some will tell you what happened in the present. Not very many will tell you what could potentially happen in the future. All right, so and that's why I like this indicator so much. So the indicator is called Ichimoku, and we're going to learn how to use each component of this. So do you have a black chart with a blue ribbon going through the chart right now? Grab a drink of water, my throat's scratchy. All right, let's learn the basics of Ichimoku, because it can be confusing if you don't learn it in a component type way. I'm dyslexic, this is how I learn, so it's also how I teach and share things. So the blue thing is called the cloud, C-L-O-U-D. Now the theory behind the cloud is if you are above the blue thingy, the cloud, or below the blue thingy, the cloud, if the cross section is above the cloud, it's considered bullish in nature, and we want to try to stay long if we possibly can. If we're below the cloud, we want to stay bearish in nature, and we want to stay short if we can. Now, it's going to bounce off the cloud like a nice little fluffy cloud, or a mini trampoline, or it's not going to work at all, okay? Or it's going to bounce off like a little pillow, or mini trampoline, mini trampoline, mini trampoline. That's the first piece. That's called the cloud. Second piece, C-L-O-U-D. Second piece is turning line, T-U-R-N. Turning line, okay? If we break the yellow turning line, which is the fast line, we may go a little bit lower. So we've got the cloud and we've got the turning line. Third part, once again, C-L-O-U-D. This is the turning line, T-U-R-N. And this is the standard line, STD. So if it breaks the yellow, it will probably go to the purple. The purple had better hold and bounce up. If it doesn't, it's going to go to the cloud. And the yellow line will get tested a lot, and sometimes it'll hold and sometimes it won't. It's a little bit weaker. The standard line, which is usually purple, but you can change the color of it, is usually stronger. Okay, so we always look for that one to hold support and resistance better than the turning line. And then last but not least is you got the lagging line. So you got cloud, C-L-O-U-D. You have the turning line, T-U-R-N. Then you have the standard line, the STD. And now you have the lagging line. Here's why I love this so much. This is what happened in the past. This is what's happening right now. And this is what it's saying is probably going to happen in the future. It's going to go sideways to slightly up. If the yellow does not hold, the purple had better hold and it had better bounce out of there. If the purple doesn't hold, we're going to go to either the top of the cloud or the bottom of the cloud. If the cloud does not hold and it closes 1, 2, or 3 bars below the cloud, then we will short this sucker and we've got a nice new downtrend established. For the most part, though, it's saying that the cloud is up, slanted up, and the angle of attack is good. So it's probably going to pull back at some point and then bounce off here and go substantially higher. So the turning line is the midpoint calculation of the high and the low of the last 9 days divided by 2. So here's how that works. You take today's price action, you go back 9 bars, you look for the low, you look for the high, and in that range, you pick the high of that range and the low of that range. You add those two suckers together and you divide it by 2, and that'll give you the number 450.07. Your indicator is going to tell you this on your chart, okay? Your indicator will just do it. I'm just showing you how it's calculated. Now, we know from previous explanations that if we were below the cloud and we went into the cloud, then that's going to be looked upon as overhead resistance. The cloud is red. We want to stay bearish if we can. If we break the turning line, then the next spot we're probably going to go to is the bottom of the cloud, and then also down here to the standard line on our next trade setup. So the standard line is the midpoint of the high and the low of the last 26 sessions. You're going to take the high and the low of the last 26 bars and then divide them by 2. That number will be your midpoint, okay? So here's how that's calculated. So here's the standard line. The standard line is always the one that's second closest, so that's the first one. and this is the second closest one to the cross section. So this is the turning line here, and this is the standard line. So you take today's price action, you count back 26 bars, you find the low in the range, and you find the high in the range. You add the low to the high, you divide that by 2. That's going to give you 425.42. The math is already done for you on almost every platform out there. If you're trading on a platform that does not have Ichimoku, change platforms. This is going to help you find better trades. All right. So we ran up into overhead resistance. If we break the turning line, we're going to go to the bottom of the cloud, T1. And if we're going to go below the cloud, then we're going to target 2, which is going to be the standard line. So we're going to get short right here from 450.07, and we're going to try to target 425.42. Cloud span A and B is the midpoint of the turning line and the standard line, 26 bars forward. So what we're looking at here is we've got our turning line here, we have our standard line here, we're going to take a midpoint, and then we're going to forward project that in the future, 26 bars. Same thing here, turning line here, standard line here, forward project that in the future, 26 bars. Now, cloud span B, a little bit different, not that bad. You're going to take the midpoint of the high and the low 52 sessions shifted, and you're going to press that forward 26 bars. All right. So what we're going to do is we're going to take today's action. We're going to go back 52 bars. We're going to look for the midpoint, and we're going to shift that in the future 26 bars. So those are the components. Okay. Now let's talk about the last one, which is the lagging line. The lagging line is the lagging line for a reason. It lags price. It's the past. So what you're going to do is you're going to take today's current price action, like right here. We're going to zoom in, and we're going to see this is today's price action, and we're going to project in the past 26 bars or 26 days in this case. All right. So that's what all the things are looking for. Now let's dig in here and see some of these trades that we're going to be looking for. I don't have enough time to teach you every signal that I like in Ichimoku, but I can teach you one really good one, and I can show you how to scan for it, and we'll spend some time scanning for those in just a second. So lagging line crossing the cloud, price crossing the cloud, price and lagging line touching the cloud spans crossing, the turning line crossing the standard lines. Those are all signals. Now for me, I like when the price crosses the cloud, and that's my Goldilocks setup. It's not too fast, it's not too slow, it's just right. So this is what this looks like. This is a lagging line when it crosses the cloud, so you'd get short, not here, but here because it lags price action, right? And then you'd have to wait for the blue line to get back above, the lagging line back above the cloud, so your price action would be about 520, so you would have shorted this thing at about 590 and covered at about 520. That leaves a little bit to be desired. That's the reason I don't like that one as much as I do like this one, where we have the price action crossing below the cloud. 1 bar below equals an aggressive setup, 2 equals moderate, 3 equals conservative, and if I can get this blue line to follow along, which is the lagging line, well then that makes it even better for me. So if I've got 1, 2, or 3 crosses below the cloud, then all I have to do is wait for 1, 2, or 3 crosses back above the cloud. So now I would be short around around 630, 620, and then I would cover it back here at 470-ish, 480-ish, okay? So I'm getting more meat out of the middle. So that's the scan that I'm going to do a trade for. I want to know when it's newly above the cloud or newly below the cloud, and I want to know when it's doing that on either a daily, a hourly, or a 10-minute time frame. And I try to stay on the right side. Now, these are some other signals that you can take. Lagging line touching the cloud, price touching the cloud, those are signals. We also have the crisscross trades where you get the price action below the cloud, and then the turning line and the standard line criss and then cross. It's kind of like a moving average crossover. It's a faster way to trade. It also gives you more false positives, but it's not bad. So here are some bullish signals. Price above the cloud are bullish. Price in the clouds are bullish if they come from the bullish side. The lagging line crossing the cloud is the main signal of trend change. Price crossing the cloud is an earlier but less reliable warning of trend change. Price and lagging line will often find support at the cloud's edges. Cloud spans crossing may be a sign that the trend is changing. And be on the lookout for thick clouds after a run-up, which could mean that the trend is about to change. Those are bullish signals. So I'm going to put the bearish signals up here real quick, and I'm going to grab a quick drink of water. As soon as you're done reading, type in done, D-O-N-E. So I know you're done reading, and I'll move on. I'm just going to grab a quick drink, and then we're going to actually scan the markets here a little bit. All right. All right. All right, we got some people saying done. All right, so they're just the polar opposite of the longs, the bearish signals are. All right, so let's discard this. And what I'm going to do is I'm going to show you how I use this in my trading. So the first thing what I do is let's make sure everybody understands what we're doing here. So we're going to go at ES real quick. And in this case scenario, the ES would be a short because it went below the cloud. Does everybody see that? So the S&P should be going lower next week. If I look at YM, the Dow is actually slightly below the cloud, so that's a short too. If I take a look at US is the 30-year bond. I've been short both the 10-year and the 30-year bond because they're below the cloud and they continue to move lower. Now, the cool thing about this is what I can do is check this out. I can click this and go Ichimoku and go pop, 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 pop. And I can make this go newly above or newly below the cloud on a time frame, and it will filter for me the cloud, which is really cool. And then what it'll do is it'll say WBA is newly below the cloud, and you can do that within TradeStation, and it's not hard at all. So here I've got a signal for newly below DVN on a daily. You see that right there? So I know I'm going to focus on this on the downside come Monday, DVN, because it's a daily below the cloud. GM is a newly below the cloud. See that new below? That's a new short. GT is newly below the cloud. That's a new short. I can also come down here and go, oh, what if I want to go newly above? Well, I can go, well, Visa is newly above. It was in the cloud and it closed back above the cloud. Now, if you don't have TradeStation, don't worry about it. You can use this on stock charts, which is a free service. So you go over to stockcharts.com, and what you do is you scroll down here and you scroll down to this little blue box that says predefined scan results. You click that button, and then what you do is you scroll down here where it says Ichimoku. It goes candlestick patterns, and you come down here to where it says Ichimoku patterns, and you go moved above the cloud, move below the cloud. You hold down the control key and you go moved above, move below, and then that'll put you to two tabs up here, and it'll tell you, all right, these are the things that are above the cloud. You've got 207. I'll shift it or sort it by the exchange, and then I'll say, okay, well, moved above, ALLT, ATRC, AVHI, Checkpoint Software. I can also do move below the cloud and sort that below the cloud, and then all I have to do is just chart these things. So if I want to do newly below the cloud, then what I would do is I'd say, well, here's one right here. Here is right here. Let's take a look at this one right here. ACWX, and I would just hit the chart button and then just format the chart where it pops up here, and you can see this is newly below the cloud. All right. So, and you just have to set the chart up to make it look like this right here. You do the overlays, you go Ichimoku full, and then you set everything else to none, and then you hit update. So it's pretty easy to do that, all right? And it's not hard. And then what I can do is I can just go back here and say, well, was there anything else here? There was ANIP. I'm going to copy that, and I'm just going to put this here. And you can scan for this. Also, TradeStation and TOS both do this, and so does Stock Charts. There's several other platforms that will allow you to do this type of stuff. So here you go. There's ANIP. It's a daily short because it broke below the cloud. Now, the cool thing about TradeStation and or TOS is you can format the symbol and go format all symbols, and I can say, hey, I only want to look for the things that are in the minute that have crossed a 10-minute buy or sell signal, and then I just change from a daily time frame to a 10-minute time frame, and now I'm scanning for trades that are newly below the cloud or newly above the cloud on a 10-minute, and I would just sort this and go boom, boom, and I would say, okay, now newly below, all right, AAP. That's newly below on a 10-minute signal. Now, I do want to confirm that with my daily, all right? So my daily is down and my 10 minutes down. This thing will probably get smoked. This thing will probably get smoked on Monday. BLK, newly below. It's below the cloud on the daily and the 10-minute. It's going to get hurt Monday. CELG is below the cloud on the 10-minute. This one, I would let it roll back over on the daily just a little bit, so I'd pass on that one. Yeah. What's the difference using a 20 EMA versus the cloud? Oh, well, they're calculated totally different. Like an EMA is an exponential moving average, and the cloud is more of a midpoint average. So they're different, Jimmy. I would have to do a back test and see which one performed better, though. But I like the cloud just because it's easier to scan for really quickly, and it tells me a lot of information really quickly on the chart, where the 20 EMA won't give me as much information. So here's HOG. HOG is above the cloud, went below on a 10-minute. So on this one, I would pass. So they have to agree with each other. The daily has to be a short, and the 10-minute also has to be a short. All right. So if you're looking for some trades on Monday, here's what I would do. I like AAP as a short. BLK looks like a decent short. Let's see some that's got a little ADX going on here. JE. Nope, I'll pass on that one. That one would be a pass. Visa on a daily is a buy, but a 10-minute is a sell. That's a pass. Okay. Yeah, when you're in the cloud, I don't want you to do anything. I want you to pass. On Verizon, we've got a daily downtrend and a 10-minute downtrend. Verizon looks like a good short. That looks good. And then if we're looking for new longs, we'd be going, okay, let's take a look at WMB, 10-minute buy and a daily buy. That's a good looking long. Okay. If I look at MBA, the daily's below, but the 10's a buy, they're conflicting each other, you just pass. Does that make sense? So I want both the daily and the 10-minute to actually agree with each other, okay? Yeah, and QQQs would just be at NQ is what that would be. So the NASDAQ right now is a buy on the daily, a sell on the 10-minute, so it's a pass because they don't both agree. As far as decent longs, here's LLL. The daily's a sell, the 10-minute's a buy, that's a pass. So first I scan for daily scans, and then I look for 10-minute scans, and that's how I find some decent trade setups that I like. So let's do this. I think I got 5 more minutes. Let me hit the PowerPoint here, and then I'll give you your link for the course, and then I'll spend the rest of the time doing symbols for you guys, okay? All right, so there's that. Time frame selection, multiple time frame selection. I like daily, hourly, 10-minute. Here is best stops to use. I would use a parabolic SAR. That is proven. If you are a serial killer of profits, if you jump out too soon or you take profits too late, parabolic SAR will help you to stop sucking at jumping out too early or staying too long. So trade setups, I looked at some live trade setups. Here's a success story. Webinar series was a great experience, very informative and educational, lots of fun. That's no surprise. All your courses have been great learning opportunities and great values. That's a testimonial from Ron. So will you be one of our next success stories? We are inviting you to join us. Who is this not for? This is not for, like I said, I'm dyslexic. If you're a holy grail seeker or a holy grail seeker, please do not take this course. If you think you're going to take $500 and turn it into $1.5 million by the end of November, that is a very bad mentality. That won't work. You're going to lose your 500, okay? If you suffer from hopium, if you're a guru surfer, if you follow me and 45 other trading gurus online and you're just piecing pieces together, pick 1 or 2 or 3 of us and learn as much as you can from those individuals, and then steal from us, incorporate that into your trading plan, and then move on to the next person. If you can't make a decision, obviously it's not for you, and if you like to make things more complicated for no good reason, obviously this will not be for you. So who is this for? If you are serious about making real monies in the markets, if you are looking for a proven system, if you can follow a simple set of rules and directions, and if you know that your success is tied to taking action, then the course is probably a good fit for you. Here's a fraction of what you will learn. The #1 best-selling Ichimoku course on the market, 7 proven setups, trading rules and indicator settings, a checklist with cheat sheets with entries and exits. I will give you the stop losses and the targets on every single trade, how to scan the markets with Ichimoku, how to filter out the best trades, never guess what to do next, and how to avoid head fakes. All right. Here is your link for today's offer. Ichimoku Cloud Trading Secrets retails for $197. I'm going to give you 1 follow-up webinar, 2, 3, 4 follow-up webinars. Once a week for the next 4 weeks, we will get together on either Monday or Tuesday evening, and we will scan the markets together to find the best trades to take for that week. I will also do 1 day of live trading in front of you, and I will either make money or I will lose money. Either the market will kick me in the teeth or I'll kick it in the teeth. And that's a total value of $682. Your special offer is $97 for today. The deadline is for the first 50 people. And the link is hubertcenters.com/cloudy. There you have it. There is your link. And then I'm going to, I think I'm out of time. These things go quick, man. So I appreciate you guys showing up. Let me give you your link here. Like I said, that's for the first 50 people. The reason we do it in 50 slots is we have a rolling class that we put on every week, and we want to make sure that we only have so many people in there. If I have more than 400 or 500 people, it's just kind of hard to teach them all at the same time. So it's an on-demand course. It's a one-time fee, $97. And then you're good to go. It's hubertcenters.com/cloudy. I think I have maybe 2 minutes here. I'll take as many questions as I can. I'll do symbols, but I think I only got 2 minutes. I want to make sure that they stay on time. Cloudy, haha, looks good. Are you following up live webinars? Can you? Yeah, they're follow-up live webinars. They're once a week. So you take the on-demand class, which is a video course. So as soon as you hit add the cart, you could get through this class this weekend, and then you and I will meet either Monday or Tuesday. The link is hubertcenters.com/cloudy. It's above my charts right there. And then we'll scan the markets either Monday or Tuesday. They are all recorded, and they are all live. What we do is we go through all the futures markets, then we go through all the scans on a daily, and then we look at some hourly stuff, and then you can ask questions. You can bring your own individual stocks, AMGN here. So Amgen is a short. Looks like it's going to get smoked down to 125. At soybeans here, at soybeans. Soybeans is in the cloud. I would leave it alone. For swing trades, is it necessary to look at the weekly and daily charts? No, I would just look at the daily, Jimmy. Please have a look at Tesla, TSLA. Tesla is a short. It's below the cloud. The 10 minutes is short, and the daily is a short. It's going to go back to 190. All right? Yeah, everything is recorded. It's not a big deal. If you can't make the classes, they are recorded, and it is not a big deal at all. We record every single class. Guys, I don't want to take anybody else's time up. I know my good friend, Sir Robert Hoffman, is up next. He is the, let me see how many championships he's got underneath his belt right now. Currently, he has 22 real money only domestic and international trading championships. Make sure you stick around. Rob's going to teach you some really cool stuff. He's got more trading championships than anybody else that I know in the world. I appreciate you guys coming to the webinar, and I will see you on the class. It is hubertcenters.com/cloudy. I want to make sure that the guys at MTI stay on time, because it's hard to wrangle all of us guys if we talk over. All right. Good luck. Hope it helps. Have a great weekend, and we'll see you on the next one.